Ladies and gentlemen, it is your pal Jay Step 4 with Realist News on YouTube. Been following a guy a little bit lately on his YouTube rounds. His name is Lior Gantz, founder of Wealth Research Group. And I reached out to see if I could get him on the show. Now Leo, are you in Israel? Is that right?
Yeah, I'm currently here.
Okay, so he's on another part of the planet than we are over here in America. It's like 4 or 5 o'clock over there. It's 10 a.m. here. So he's been kind enough to make some time for me and my listeners. He's 32 years old. He's been investing since 16. Focuses on the natural resource sector, marijuana legalization, and cutting-edge technologies. He is regarded as a small-cap expert. Again, he's the founder of Wealth Research Group, and that website is wealthresearchgroup.com. I'm actually going to have a few links in the description box for you to check out on his website if you're interested in what he does. So, Leo, thanks for being on the show. Man, we've got some pretty interesting dates coming up. April 23rd, French election, at least the first part of it, as you were discussing with myself just a few moments ago. I guess it's kind of a two-round thing. April 28th, U.S. debt expiration. And then we've got an interesting time frame around the 7th or so. Is that the potential end of the euro? Again, Obamacare could begin to implode after that. Then again, Donald Trump, as I heard on the way home from work yesterday, is this week it's coming. We got a new repeal and replace. It's going to be a done deal. We're going to get on taxes after that. And I never seem to hear him say anything about the debt ceiling. Matter of fact, nothing on the radio really talks about that much other than they've got a few days to get something done. But let's start with the French election. The first part of it starts, which is Sunday, actually the day this video is going to be released. What does it matter if Le Pen wins or doesn't win? Because I feel like she's the Trump of France, and the mainstream did the same thing to her as they did to Trump. And same with the polls. All the polls show, and I'm like, well, there's a populist movement pushing that woman. I think nobody should pay attention to anything we see on TV or polls or anything else. She's probably going to, take it by storm. But one way or other, what do you see happening with this, tomorrow?
Well, first of all, glad to be here, Joe. Tomorrow they're going to have 4 candidates that are running very closely to each other. Marie Le Pen is actually not the most rigorous of all of the candidates. They have actually one that's even more extreme and more pushing towards closed borders and making security the #1 theme of his campaign. But she is now leading the polls. But as in the case of the U.S., there are many, and about 30% of the population are going to vote when they hit when they actually go to the ballot. So you've got 3 out of every 10 French people that are not decided yet, and the campaigns there are already 2 years in the making. So you've got campaigning for 2 years from these candidates, and it's still not undecided. Tomorrow is going to be the first round. So two candidates are going to push forward to May 7th. That's the second round, and that's why it could be the potential end of the euro, because if Le Pen or the other candidate takes this, they might try to exit the euro. They're running on a theme that the euro is a disaster for the French economy, and they should become independent again with regards to the monetary side of it, and this will help them in many ways because there's such a refugee crisis there from the Middle East. Yeah. So that's coming tomorrow, and we'll definitely see what that details. But it's very important to understand this. This is part of a long-term process that started with Brexit, and then the U.S. elections, and now it's France. It's a rise of the populist movement, and when I say populist movement, I just mean it's a general dissatisfaction with the status quo, and what we've seen from the 1980 until the 2000 is a boom in the economy fueled by debt, and that has made people, rich on paper, and actually made many people wealthy. But those people are now approaching their 60s, and basically it's the baby boom generation, which is not the which is they're not controlling the politics anymore in many of these developed countries. They are about a fourth or a quarter of the economy of the population in the U.S. and in Europe. There's about 80 million boomers in the U.S. that are about to retire or in the process of retiring. But the younger generation is what's fueling this populist movement in Europe and in the States, because they're dissatisfied. In Europe, it's very rough to be a 25-year-old. You're basically half of them are out of jobs, and in the U.S., it's not looking very bright as well with the college debt cycle that's totally out of control. I mean, people are getting out of college, they see no clear path as their parents did. So this is a very pivotal change in the economy, and Ray Dalio, who's the largest hedge fund manager in the world, has just issued a warning to all of his clients, including large institutional clients, that populist movements in Europe and in the States are resembling the 1920s and 30s, and we all know how that period affected the world, both socially, economically, and with regards to war. This is a time where it's going to be very shaky, very volatile, and I've been listening to interviews on YouTube from the alternative media for at least from 2007. So I've been listening to many warnings by many people, but the most alarming warning is coming from Warren Buffett, the eternal bullish American optimist, who said, look, don't be surprised if you'll see a 50% decline in the next few years in the stock market and in the general economy as a whole. So very, very luminous times. And like you said, April 28th is when the U.S. debt expiration is coming due. We actually did a micro documentary on this, Joe. It's called June 1st. Deep State to Overthrow Trump, and it got like 250,000 views on YouTube, and it's about the fact that the U.S. is burning $80 billion per month, and in March 15th, when the Obama holiday, the debt holiday they signed, was stopped, they had $200 billion in the Treasury. So that's why June 1st is like it's like the date when they gotta decide what to do. But look, this is not a major issue because they can obviously do what they do always, which is either extend it or get around it legally with their many ways. But the impact on the market is clear. Gold is 1% away from breaching its 10-year resistance, and if it does that, then gold prices are going to go about 10 to 15% higher. So we're talking at least $1,450 to $1,500 per ounce. Gold stocks and silver stocks will follow. The juniors will become very explosive as they did in 2016. Yep. And as you can see, that theme that people have been in Wall Street have been saying that when the Fed raises rates, gold becomes less attractive. That's been proven to be nothing but a fancy way of being wrong. Yeah.
Now, April 28th, U.S. debt ceiling. Like you said, it doesn't really matter per se on that day. They'll do things like they did last time. The Forestry Service will be closed down in the national parks. Some nonsense like that. But you're saying June 1st, U.S. Treasury to implement emergency spending measures, to deal with them not passing it, let's say, by the 28th. But I was just reading, I think it was last night, Friday night, that there was a Democratic senator, I don't know if he was out of California, I don't remember, congressman, who just put out a bill, hasn't gone anywhere yet, other than, he just introduced it, and I'm going to track it, but hopefully this doesn't turn into something. But just what you said about, the potential of Donald Trump being impeached or whatever, his bill is modifying previous law and saying, changing some things to say basically any living president and vice president, if they combined, or I don't know how many of them it'll take, decide on by themselves, we don't think this particular president today, since we were presidents and we know, is fit to be in office because of decisions they are either making or not making, we can have them actually impeached. And I saw that, I'm like, wow, that's pretty incredible. Now, I don't know, again, with they say, well, we have a Republican-controlled House, Republican-controlled Senate. Of course, we have a Republican president now. How are they going to get that bill to go through? And well, not even number 3, but the final thing would be, are you actually going to hand that to Donald Trump and have him sign it? Like, sign it into law, But the point is, there's a lot of pressure coming out now to, let's see if we can get around some things and get this guy out of office. Do you think that's highly probable, slightly probable? Not necessarily the law, but him being taken out of his position for one reason or another.
Here's what you need to watch. The average American president on the first year of his presidency throughout the republic has a 63% approval rating. Trump has about 34% approval rating right now. It's well below the historical average. So his stance is not stable. And whether or not forces within the establishment from the right and the left, it doesn't matter. The establishment hates him. They can't have their status quo, and they can't rule like they did in the past. And so it will be a 4-year fight for him to prove himself every day, and he needs the people's approval to be strong and confident in what he's doing. And he's got to produce results for the people who voted for him. They must see that he's doing things like he's promised. The infrastructure plan was one of the economic themes that he ran on. The securities, increasing defense, was the second one, and he's trying to get a down payment on the wall now of $1.4 trillion. The infrastructure plan is not that big. Don't get fooled, right? Obama's infrastructure spending was about $1 trillion a year, and Trump has proposed $2 trillion. It's not like a revolution, but the idea is, and the theme behind this is that Trump is business oriented, and therefore he will know how to create jobs. The tax cuts are basically cutting dividend tax, helping helping American companies bring foreign money back in. Look, Cisco, Google, Qualcomm, and Oracle. 4 of these companies, and Microsoft together, these 5 companies, they control the majority of the cash of the S&P 500. They together have 80% of the cash of U.S. public traded companies, these 5 conglomerates, and they're holding billions and billions in offshore accounts, because if they bring it into the U.S., they'll pay 35% tax, and they're avoiding it. So that money is just basically frozen. And it doesn't do any good, not to shareholders and not to the general economy, because if that money comes in, and that will come in if they cut taxes, or if it gives them a holiday or whatever, we're talking a colossal amount of cash. It will come in, they can issue those dividends. Those dividends will get the shareholders. It will fuel the economy again, fuel the stock market. This is the type of things that people are looking for Trump to do. But if they see that the establishment is trying to challenge and counteract everything that he's trying to do, this will materialize in their expectations of the market, and the market will not be that expensive anymore. If you take a look at the S&P 500 right now, the PE ratios, meaning if these were private companies, it would take you about 25 years to return your investment. So the only reason that they're that expensive. And this is going back to 1890. There are only 3 times when the P/E ratio was 25 times earnings. That's in the 30s, that's in the dot-com bubble, and that's in another bubble that happened in the 1890s. So the only reason that they're that expensive is because stocks have underperformed for 20 years. They've returned 3 to 4% instead of their usual 7 to 8%. And with tax cuts, people people across the board are saying, look, there's going to be more discretionary income for the average guy. He's going to come back to the stock market. The effect and the trauma of 2008 is all but gone for 150 million retail investors in the U.S. You've got 80 million people fully liquid. These are the baby boomers. They're selling their real estate. They're getting their retirement funds liquid, and they have a lot of money. They're gonna try to supplement their income, right, with something. So they're gonna go into the market as well. You might see a huge bubble again in stocks, like you did in the 2000s. So.
Is this after a crash first, you think, or from where we are now, another additional bubble?
Well, from where we are now, here's the thing. In 2008, Joe, what was lacking in the system was credit. So because there was a lack of credit, one day, it was such a random day, the commercial banks just decided that this is enough. We don't trust other banks. And credit just stopped. And because there was such a lack of credit throughout the system, it took only a few hours for everything to start unraveling. All of that subprime mortgage, colossal through the years, but it was all dependent on the fact that there was trust between the banks. Banks loan each other money every second of every day. Yep. And so when that stopped, that was a credit crunch, and that that created that entire crash. Now there's plenty of credit and plenty of cash. In fact, all U.S. banks, major banks, Bank of America, Wells Fargo, Citi, etc., they have excess cash. They're looking to return money to the Fed. They have so much cash on hand. It's actually crippling their business model. So you don't have a problem with liquidity in the global economy. What you have is a federal governmental debt crisis, but the private sector is not doing that bad, right? So the only problem that really exists here is how will the politicians come to terms with the debt cycle that's ending in the Western world. It's a debt cycle that started in the 30s. Those debt cycles are about the span of a man's lifetime, so they're about 70, 80 years in the making. You've seen a real crisis appear in 1971 when the U.S. had all of this deficit spending throughout the 50s and 60s with the Korean War and Vietnam War, and with the fact that they were backed by gold at 35 to 1. The world was asking for an audit. You know what? It was the French. It was Charles de Gaulle who asked the U.S. Federal Reserve to see an audit of the books. And when they couldn't do it, Nixon, just took the easy way out and said, "Look, we're temporarily cutting the cord between gold and currencies," and made the entire global economy floating currencies. They're floating to each other, and that's why you see, think about this in an historical presence. Let's say you're a gold investor, a gold miner. Usually, the price of gold is fixed, it's solid. It's a nominal number, and so you can always run your expenses, run your run your income, and then you can see if you have a margin. And you're a profitable company. Gold companies used to issue massive dividends because the profits were so fixed. With a fiat monetary system, gold is volatile. It's just floating against other currencies. So that's why you see it going from 35 to 850 in the 70s, then going all the way back to 200. And now it's for the last 17 years it's gone up to 1300. that is not a fluctuation in the value of gold. Gold has a price that's attached to its utility as jewelry and as an electrical component and connector, and it has that monetary side of it, that value that derives from the fact that it plays all of the roles of money that gives its price. But that price is not that volatile, right? It's a piece of metal. So what you're seeing is a very different type of economy. And when you lower interest rates down to zero or negative, as they're doing right now, you're at the end of your tool system in a fiat monetary system. And you can print money, you can lower interest rates to zero, and then you can the next move is direct injections to the economy. That is what's coming, and I can tell you this almost as a certainty. You will see the next round of stimulus from the central banks worldwide being some sort of direct injections to the consumer, because what they've done previously did not trickle, and the multiplier did not go to the average person. He did not get those funds. As I told you, the excess cash is at the commercial banks. They got it for zero. They're investing it in 2 or 3% bonds. So it's free money that the taxpayer is going to pay for, and they're earning 2% or 3% free on that arbitrage, that spread. And that is what's driving this populist movement. Though they do not know the cause of it, as I'm explaining to you right now, the people in the street know that the economy is not moving. People are not hiring, etc. What you're seeing in the unemployment rates is basically a fact of obviously of rigged numbers with. Coupled with the fact that they're not counting any people that are over 99%, over 99 weeks looking for jobs. They have all kinds of ways of making the numbers look and appear better. But obviously, the average person in the U.S., there's only 15% of Americans ready for retirement that have more than $10,000 saved for retirement. I'm talking the age bracket of 55 to 65. And now with the proposal to cut taxes, something's got to give. They either inject money to the retiree to replace the entitlements that they have promised them, because these entitlements are unsustainable. They either delay the age of retirement. All of the solutions are very unpopular, and that's why I don't think that they will try to impeach Trump until he announces a very unpopular decision, a very rough decision, a real decision. You know what I mean? Like if you're addicted, Joe, to substances, for instance, and your mother would say, "Look, I'm gonna lock you in the house. I'm not gonna give you any. I'm gonna get you a date, a caretaker. He's gonna prepare your meals, blah blah blah." You're not leaving the house. You're gonna be furious, but you're gonna be thankful, right?
Yeah.
You don't want that initially, and that first round of fury from the people, especially from the retirees, you're going to see them coming in and say, "Look, we're going to try and change this. This is going to be like a $1 billion marketing campaign that's going to be funded by all these interest groups." But that's where I think they can start, chipping away at Trump. But we'll see. He's super smart, right?
Yeah.
And he's seasoned. That guy is 73. It's not going to be an easy thing to do. Yeah. And just the volatility of it will be problematic for the entire economy.
Let me ask you, on that note of what you just said, do you think, because I'm seeing it in a few other countries as a trial balloon currently, which is they are calling a universal basic income, is that what you think this could be as far as the next stimulus, which never goes away, just a basic income for everybody across the planet that they want to roll out?
It might be. It might be. I don't know if they will actually call it the universal basic income or whatever, but you've got in a fiat monetary system where credit is deflating like it is right now because people are not taking out new loans, they're scared. The economy's just institutions are taking out new loans at massive amounts, and those institutions are basically doing it to buy back their own shares and look better on paper. So the average person is not that excited to go into debts. And by the way, that's a part of raising rates, the raising rates strategy. Because think of the average guy, right? If he sees the Fed raising rates and he's getting a call from his broker at his community bank, and he tells him, look, we're starting to raise our rates. Do you want to originate a mortgage or not? Are you going to wait for higher mortgage rates? So the average person is going to get lured into taking out a new mortgage again, which is what obviously the American economy throughout history is run on construction. That's the biggest driver of the American growth. And by the way, that's part of the reason why the establishment has always left the borders open for illegal aliens, because you just
give them a place to live.
Yeah, you just get population growth, and population growth is basically what created the United States. You got population growth from Europe all the time. It's like a bigger market every year. That's why I'm very bullish on cannabis legalization, because you've got this amazing market where the margins are insanely high. You know, marijuana and cannabis, even legally, even with all the fees of becoming a legit company, it's better than ice cream. You can hand out samples, and the margins are insane, and you've got to put an amazing market that's just going to grow and grow and grow and grow. There's many people that are obviously not using marijuana either for recreational or medicinal purposes, or even pharmaceutical purposes, because it's illegal, and so this is the same way as in the U.S. So look, to answer your question, something's got to give, and something's going to give real soon. Not only is the U.S. in trouble, but China is strengthening, and China is creating a currency that is very strong. Wealth is moving from west to east, and if the Federal Reserve doesn't step in again and liquidate the U.S. consumer, what you're going to see is American assets being bought by the hundreds of billions and the trillions of dollars by Asian investors and Asian governments.
We're already starting to see a little bit of that, even in Canada and in certain parts of the U.S. Matter of fact, I think speaking of Buffett, actually, wasn't it Buffett? He's getting ready to go over to China to work with some investment group over there to bring investors back over here to get in our housing industry. I'm saying, wait a minute, we're already at an all-time peak again, and you want to bring more Asian investors to push up prices on top of us? We're going to be poor and destitute by the whole Asian society coming over here and investing and buying property over here. How are we going to keep up? How are we possibly going to be able to afford a house over here?
Unfortunately, Joe, that trend will not stop. The India and China are getting richer and richer. Their middle classes are, they're booming. In China, the middle class income by 2029 will be about $34,000 a year, and you're talking 150, 200 million people. That's so much wealth that's being created on the Asian side, and on the U.S. front, you're not seeing that growth. In fact, you're seeing a 2 to 3% growth per annum and a debt growth of 3 to 4% per annum. So the U.S. Economy and the average person is not gaining traction at all, and there's a massive wealth shift from west to east, obviously. And this is important. I've been investing since I was 16. I'm 32 now, and I can tell you this: any situation, you are not bound. You're not a plant, right? You're not a tree. You're not bound by your locality or your citizenship there's so many options for you. And the reason I'm telling you this is I'm not here to become a victim or to to perpetuate any sort of victimness. I'm here to tell you that there's so many options as an employee, as an entrepreneur, and as an investor to meet these challenges that are coming. But it's important to note that they are coming, and what you should do personally, and what everyone should do personally, is first of all sharpen their skill set and find things that are of value to the market and increase those. That is always your main income. Investing is secondary. Your main income will always come from what you do best and better than the rest of your peers, etc. And the more you can the more you can be of value to the market, the more you're going to get paid. That's just the way it is, no matter if it's a crisis or a booming economy. And then on the secondary front, on the investing front, you need to be diversified politically and economically. So you need to be you need to have your funds in various asset classes, and you might consider politically diversifying as well, and offshore real estate. So don't just buy real estate in the country that you reside in, or offshore gold and silver. That's easy to do, and we wrote about it at wealthresearchgroup.com/safe havens, where you can store gold and silver bullion at safes around the world. You don't just need to own it inside of your own locality, and it's a very easy thing to do. With cryptocurrencies, you basically have your funds available, everywhere. It's not even it's not even a matter of locality. And if you're going to speculate, if you're going to use some money to try and get a large payday, then I think gold and silver junior stocks are very risky. As always, nothing's changed. But if you can partner up with the best people in the business and find a vehicle that works, those companies in 2 to 3 to 4 years, when gold and silver prices go up, and they will go up, they might be volatile, but the true value of gold can be easily calculated by just how much gold should back the currency, right? So at the classical 1922 to 1929 gold standard, it was about 40% of the currency backed. That gives gold a value, a price, not a value, but a price of about $6,000 per ounce. But if you take it and you want to get into the 1913 to 1922 level, which is simply back the entire currency, it's about $23,000 per ounce. And that's, people talk about the fact that the price of gold will be, 50 to 100,000 whatever dollars per ounce in the case of a crisis. I'm not talking a crisis time. I'm talking just, mathematics here. Yeah. And so, what drives gold prices is negative interest rates. And though they're raising rates right now, inflation is going up as well. And so the real interest rates are remaining negative in most developed countries. And that's what's important to remember.
Okay. One last thing. Greek bonds are coming due middle of this year. We already seen the poor country of Greece bailed out numerous times. The people don't want it. They're forced on this, this debt. They're privatizing, taking everything away from the people, leaving the country with nothing. Puerto Rico, kind of a part of America, $70 billion. That's like their debt. Our national debt's $20 trillion. That's like their issue they have to deal with. Hasn't been dealt with. That's now back in the forefront again. They can't make that payment. So I look at all these things, and this is not the only two countries having problems. And I just look at this. These things have to be dealt with. And every time you hear one of these stories, it's just another, in my opinion, another notch for, hey, this is why we need to look outside the system. Precious metals, like you said, junior miners, Bitcoin. Although you haven't talked much about it, you did mention marijuana legalization, which I do see still in its infancy. We only had a couple states now or whatever in the United States, and I do live in Florida, and we just passed a law last year that takes effect this year, as, on a trial basis for medicinal purposes. So I do kind of see that might possibly be one of the next things. Is that something you discuss on any literature or anything on your website?
Sure. Here, if you'll permit me, I'll explain to you and your listeners about the marijuana legalization process. And also, just with regards to Greek bonds, I was in Greece last summer. I'll be in Greece July 20th when the Greek bonds come due. I can tell you Greece is a country that is basically divided in two. You've got mainland Greece and you got the islands. On the islands, the people are living off of tourism, and they have the only problems that they're experiencing is not a lack of tourism, because that's not changing. People are coming in every summer and going away in the winters. That's their lifestyle there. What they are experiencing are banking issues. They can't get money across from mainland to the islands. They get shortages. All of a sudden you're in the summer and they have no watermelons in the restaurant that you're eating at, because he tells you, look, I couldn't make a payment last week. The bank was closed, blah, blah, blah. So Greece is a truly small economy, a very small economy on a European scale size. But the principles, it's a matter of principle for the Germans and the French that they don't want to fund that country anymore. And that's the problem here. That's what can escalate when these two countries that, and mostly Germany, they get up in the morning, they go to work, there's no siestas, there's no breaks, there's no socialistic laws like in Paris, where there's a police roaming the offices at 6:30 in the evening to see if any employer has left his employee there after 7 o'clock. You can't do that in some of the streets in some of the provinces. They have so many socialistic laws which don't exist in Germany. That's why Europe is very different. Every country is so different. It's hard to create a market out of it. They tried, but it's basically falling apart, and the Brits are going to have an election for Brexit on a strategy mandate on June 8th. So this is all coming due right now. On marijuana, here's the thing. This is not the 1970s anymore. We're not in the Nixon administration. Marijuana is still labeled federally as a drug, such as in the same bracket as LSD and heroin, right? But obviously, science has come forward, and there's so many active ingredients inside of the plant that are helping people on a medicinal level, recreational level. It's a shift of generations, and then big pharma can't get in. That's the big thing about this, Joe. That's why I'm very excited about this. You and I, average investors, we can get in before the institutions get in. Yeah. They can't, their legal advisors tell them you cannot do it. Now that Canada has created legislation for full legalization by next summer, Big Pharma is going to start lobbying in the U.S., and they'll basically say, look, either we're going to start our factories and our initiatives across the border, or you move out of the way and legalize this fully on a federal level. So Canada's move here, it will very likely pressure U.S. politicians. Now, a few beautiful things about this. First of all, the multiplier for the marijuana industry is about $3 to 1. So every dollar that gets into the marijuana industry, it creates $3 worth of economy. The reason is marijuana cannot be outsourced. No entrepreneur is going to outsource to China. Yeah. His plan. The jobs are created and they're permanently going to stay here. This is not a jeans factory or a TV factory or an automobile factory where you're going to see cheap labor replacing quality labor in the U.S. like you've seen in so many other industries. This is here to stay. You've got potentially 50 million clients for marijuana in the U.S. Right now, there's about 20 million people that are taking either recreational or medicinal marijuana. And I'm talking including the illegal market. Just think of the tax benefits of having everything legally. And I'm not just talking about the tax benefit. Think advertisements, CPAs, lawyers. This goes on and on because marijuana entrepreneurs are thinking of new ways to create boxes where you're gonna have your office space, warehousing. This goes on and on. And the thing about it is it's very, very profitable. The only thing more profitable per square foot than marijuana stores are Apple stores that are like $4,700 per square foot. This is insane. Yeah. Luxury jewelry, and then it's marijuana. It's bigger than beer. It's bigger than cigarettes, and obviously it's though it's labeled as a drug. There's a different aspect to this than the recreational one. It's the medicinal aspect and the pharmaceutical aspect. And I think we're so early in the game that you can invest in US-based companies that are publicly trading, and you can invest in Canadian companies that are publicly trading. The difference is Canadian companies don't have any will not have any restrictions coming soon. They can create a company that will be across Canada. In the US, if you invest in a company, it can only do business in its own state. You cannot pass state borders. So that is the difference. And we're currently, we created a 3-part strategy for this. One part is the California market, which is the largest in the world. Obviously because the culture and also because of tourism. And so we're looking at publicly traded companies in California. We're looking at the Canadian market, and then we're looking at the federal progress here. So we've got a list of 100 of the best private companies, and at Wealth Research Group we do these marathons where we for about 40 to 50 days conduct the diligence on about 4 to 5 companies, and we nail down whichever one we have the highest conviction for, and we publish our ideas to members of our free newsletter. And so we do that in the marijuana sector and in the natural resource sector. We had an amazing 2016, and right now we're about to publish our highest conviction idea in the marijuana space. And if gold breaks above 1,300, we're going to release our research on a few gold and silver companies. Look, this is very exciting times. It's very volatile times. But if you know what you're doing and you're also very disciplined and you know how to basically invest with moderation, right? With proper position sizing, you don't go all in on anything, and you don't create any problems. When you can't sleep at night, right? If you do this moderately and you do this patiently and you have a good allocation, then I think there's no reason why you cannot participate in the first generation of the marijuana legalization, and why you can't participate in another junior mining stocks run. And many people that have invested in 2016 in the huge boom that we experienced between January and August, and then saw the correction, think that this was like a fake bull run. It was not. What gold did, gold prices, they tested those resistance levels going back 10 years, and they couldn't pass them through. They've tested them 3 times more, and now they're actually 1% away from breaking them. If gold surpasses this, silver has already broken it. So we're just waiting for that last signal. And if that happens, you can see as soon as next week or early May, you can see insane money that was waiting on the side for these technical indicators going back into these juniors, and the valuations are going to be very attractive going forward.
Wow. Well, Lior, that was a fantastic interview. You just went through everything I wanted to talk about without really having to ask about it, other than maybe the Greek thing. I want to just touch on that briefly, but man, Man, that's fantastic. So again, you're at Wealth Research Group. I'm going to have a few articles because as we talked earlier before we started recording this, you mentioned there's actually specific things on the site you may want some of my viewers to actually see because they're very specific to certain things. So
sure, if I might tell you, I can. I'd like to make sure that if I get this chance to speak to your audience, then just to let you know, look, we created a few special reports that are specifically for your listeners. What I did was I created an asset allocation model, basically my portfolio for 2017, broken down, and you can download that, and I'll give you the link. It's wealthresearchgroup.com/the numbers 365 global wealth. And please have that down in the description. But that's exactly how I play the what's going on in 2017. Also,
okay.
we created a special report about the top 5 safe havens, and that's on wealthresearchgroup.com/safe havens. A very comprehensive and basically a full report on Bitcoin and 2 new cryptocurrencies that are exploding right now and are worth taking a look at wealthresearchgroup.com/Bitcoin. And if you're looking to start or you're already a seasoned gold and silver stocks investor, we've got the entire playbook, part 1 and part 2, basic and advanced, at wealthresearchgroup.com/gold playbook. And you can download that. It comes to you as a PDF file. You can keep it for your records and go back to it again. And look, the point is, at Wealth Research Group, what we do is we increase and strengthen the financial fortress of people by education. These problems are not going away, but you can become better at reacting to problems. And you don't need to get all gloom and doom because of this, of what's going on. Wealth is not going to get destroyed. All the real estate that is in the world will not get demolished because of this debt crisis, right? It's just going to switch hands, switch ownership. Companies like Coca-Cola are not going away. You know what I mean? It's all going to be about either you having the purchase power to take ownership of great businesses, real estate, assets, businesses, jobs, whatever you fancy, or you're going to be on the losing side of this, and you want to make sure that you're prepared.
Yep. So you could either go to work, put it into a 401k, and let some company elsewhere that's managing, billions of other people's money, investing in the same normal stuff every single time, or you could do something like go to your website and handle business yourself. Find things that you're going to take control of rather than let some, Fidelity or whoever else manage it. And then like in a 401k, I need to get my money out now. Sorry, you can't take it out. It's not time to retire. You're not in a hardship. Sorry about your luck. So
Joe, that thing is so rigged. 96% of money managed of managed money cannot beat the index. That's 96 people that wear a suit every day, call their clients, and make a fortune. Cannot beat the index. You'll do much better just taking your money out of every trust fund or mutual fund, etc. that is managed by a human being, and just put it into the S&P 500. That in itself is a smart financial move. But if you're also looking for exposure to speculations, that these obviously the S&P 500 is not built for that, then you're going to need further education.
Okay, well, ladies and gentlemen, that was Lior Gantz, founder of Wealth Research Group. I'm going to have probably a few links in the description box for you to check out his website and poke around at the different things he just covered in this, I don't know, about 40-minute or so video we just did. So Lior, I keep seeing that and I want to say Leo. It's Lior. I've never heard that name before. It's the first time I've heard that name. So apologize for, I think I slipped out a couple times in the beginning, may have said Leo. But it's Lior Gantz, founder of Wealth Research Group. Pleasure having you on. We'll have to do this again sometime. And I'm off to head to a gun show. They've got twice a year in Tampa, and this is one of the weekends, so I'm going to go poke around over there for a little bit.
Well, thanks for inviting me, and you have a good time.
All right, take care.